So I'll be honest, there is obviously risk when it comes to investing in the stock market, whether it's the S&P 500, whether you're investing in the Nasdaq index. There is always going to be risk. But what I really want to concentrate on is that in the short term, there may always be some type of event, there may always be some type of crisis that could affect the stock market. Because the stock market is really and truly, it's extremely volatile. However, over a long period of time, that is when you tend to gain the benefits of the stock market. So here's this. Let's look at some of the overall risks to invest in the stock market. You have geopolitical events. You have things like the pandemics and epidemics. You have interest rate crisis or inflation crisis. There's also emotional and behavioral risks. People get scared, people sell. And also, if you're not well informed, you may decide to put all your investments into one company, creating a diversification issue or a risk in this instance. However, I do want to highlight something that I believe is extremely important. Let's take a look at this chart. You're going to notice that since 1970, if you were to invest $10,000 and not a dollar more, you will notice that there has been a tremendous amount of events, whether geopolitical, whether it's health scares, whether it was some type of unknown thing that the world just did not see, which would have created dips in the stock market. You would have seen the stock market sold off for a period of time. If you had gone on the news, you would have seen, oh my gosh, the stock market is crashing. However, from 1970 to 2022, if you had invested in the S&P 500, your $10,000 would have grown to $2.2 million. And that's just because of the secret sauce of the stock market, which is compounded interest. Once you get that 8% or 10% or 12%, on an annual basis, not saying, hey, it's going to go up that amount every single year, but some years you may get 20, some years you may get 30, some years you may get 0%, some years it may be negative. But when it averages out, your money is growing. So this is the most important thing is please don't start your investing journey thinking this is a get rich quick scheme. I promise you the stock market will disappoint you. However, you have to be consistent. However, you have to be patient. And once you do your research and start off slowly, you will start to see the benefits within your investing journey. So I say all that to say, when starting your investing journey, these are two of the top questions that you want to ask yourself. How much risk are you willing to take? Because that will depend on how much you're willing to start off with. Some people may be confident and may be willing to start with $500. Or some may not even have all that, and some may not be confident and they may be willing to start with $50. Trust me, as long as you start and as long as you are consistent, there is a high probability of you being successful as an investor. The next question is, what are your investing goals? Because depending on your goals, you will now be able to figure out whether you want to invest in singular companies or you want to invest in ETFs. My personal suggestion, any new beginner should start with the ETF route. That's how I started. However, some people just have different risk tolerances and they may be willing to take a few more singular companies into their portfolio. So are you hear me now? Do me a favor. Please like, please comment, please subscribe. I would truly appreciate it. I'm working really hard to make sure that you guys have the best information available to you. And I'm looking forward to your success. And please let me know what you think about the information that I've been providing thus far.